Hello learners, hi, how are you all? I'm your CA Rajavardhan back with another beautiful topic and interesting topic you can say from our CA Intermediate Advanced Accounting. And in today's video, we will be discussing the topic of amalgamation, as you can also see in the name of the video that you're watching right now. So let me get started with amalgamation, but before that, I have some exciting news for you all. The team of Yeshas Academy is back with another new batch for CA Intermediate May 2023 attempt. You might have already finished Group 1 and then aspiring to prepare for Group 2, but you definitely have a lot of juniors who are looking up to you. You can let them know the quality and the kind of coaching that's given in the Yeshas batch on an academy platform, and you can ask them to register for Group 1 of CA Intermediate with an academy to learn from team of Yeshas. The name of the batch is Excel with Yeshas. So this is the batch for May 2023, as I just mentioned. The batch has already started on 18th of August, but because it's still in the initial days, you can always join this batch. Greatest advantage, as you all know, of an academy, it is not just live classes, but the recorded backup of all the classes will be made available to you. So in spite of the fact that you miss few days of class, you can still come back and then finish them in time, well before your May examination. In this team, you get to learn law from Karthikayar sir, accounts from Mayur sir, Ravikant sir, and me. Ravikant sir will be handling your accounting side portion, and the rest of the portion will be shared between me and Mayur Natha sir. And you have your tax being handled by Vijay Raja sir, and costing is handled by Dhananjay Bhave sir. So, what are you waiting for? Take up subscription. The brief schedule of the batch is here. The tax from Vijay Raja sir is starting on 18th of August, and which is already started. Karthikayar sir will be taking law classes in the month of October. Mayur sir's classes will start in the month of August. That's 27th. It's already a portion of it is done by now when you're watching this video. Ravikant sir's accounting standards again started on 20th of August. Dhananjay sir's classes will be from September 3rd, which is already started again. My portion has not started yet, which I'll be starting very soon in the month of October. The timings initially when it started was from 7 a.m. to 2 p.m., 7 to 9 being 2 hour session, 9 to 9:30 half an hour break, 9:30 to 11:30 to 12 another break, and then 12 to 2, 2 hours, or three sessions of 2 hours each with half an hour break in between. But I think from October month it will be a little different. It will be 2.5 hour sessions, two each in a day, 7 to 9:30 and 10 to 12:30. So do enroll and join and learn from us. The highlights of this batch is you get to learn from the India's best educators. 600 plus hours of live interactive classes will be available to you, and the recorded backup of the entire thing will be available to you. No restriction on number of views. The speed, you can watch it at a greater speed, lower speed. Revision and practice sessions will be conducted at regular intervals. The structured course will be available to you in the form of PDF, which is a beautiful, colorful notes what you can download and then read from. Unlimited access will be given to all the recorded classes, and live tests and quizzes will keep be happening. Yeah, and here is the brief introduction of all the educators who we're going to learn from. And journey is going to go this way. By September end, we cover about 60% of the syllabus. In the month of October, we finish 100% of the syllabus, and in the month of November, you can plan to do RTP, MTP, and previous year questions along with quizzes, which will do a lot of them in the YouTube like this one, or in the free class platform, and you can enjoy this beautiful course page. Yeah, so live interactive classes, structured PDF, live tests, open house, digital notes, Unacademy community, unlimited access. Over and above this, if you want more, you can take up Unacademy Iconic Subscription, which gives you one-to-one live mentorship, printed study material at your doorstep, and also doubt solving sessions at regular intervals. So what are you waiting for? Take up this Unacademy subscription, and it comes at a cost of 37,000 for 24 months, 34,000 for 18 months, 27,500 for 12 months, 21,500 for 6 months, and 17,250 for 4 months. If you want iconic subscription, you can also take iconic subscription. This is at the cost of 59,000 for 24 months, 53,500 for 18 months, 43,800 for 12 months, and 35,300 for 6 months. We'll very soon be launching another group 2 batch somewhere in the month of November, December types for May attempt all by itself. So stay tuned and then take up subscription. You can say, sir, that's November. Why don't I wait till November to take subscription? The greatest advantage of taking subscription today before the end of the day is that there is right now an amazing offer running on the Unacademy platform which will give you discount up to 20% if you take up the subscription today, that is 30th of September. And in order to avail this 20% off on all the prices that I showed to you just a while ago, you have to use the code Yeshas, which is YESHAS, and using this code will give you 20% off, which is definitely not going to be available to you in the month of November if you plan to take subscription. And the price is expected to go high very soon, so seize the subscription when the prices are low and also discount is available to you all. So that's the news from my side. I hope you'll all consider this and then take up subscription. And there we go, we will now get started with the topic. A hearty welcome to all of you people to this session on amalgamation of companies. So, chapter from CA Intermediate Advanced Accounting. Mixed opinion is what people have on this chapter. Few say it is difficult, few say it's easy, few say it's lengthy, few say it is nice, but it is not worth doing it in the examination. No matter what you say, I'm going to change the perspective of this chapter. I'm going to tell you how practical this chapter can be, how interesting this chapter is, and why is it so very important to do in the exam. Yeah, so let's get started with amalgamation of companies. This is the weightage of the chapter as per the BOS knowledge portal. 33% to 38% of the marks is the weightage allocated to the chapters of employee stock option plan, buyback, amalgamation, and liquidation. I've already done a detailed series of videos here on YouTube only. It's about 3 hours, 3 videos of 1 hour each on liquidation, which you can watch, in which we have not just done the theoretical coverage, we've also done problem practice and we've done detailed discussion in a very short span of time. So you can definitely watch that, and if you watch it at 2x speed, it will come down to hardly 2 hours, and trust me, you'll ace liquidation chapter with it. And in this series, I'll finish off your amalgamation chapter, and very soon I'll come out with other chapters also. And if you're writing your examination in the month of November, don't forget what I have in store for you is a last minute revision for entire CA Intermediate Advanced Accounting. I'm planning it to do in about 200 minutes. That's a very short span of time. I do agree. About 200 to 300 minutes may entire revision advanced accounting. So stay tuned for that. That's going to come very soon in another 15-20 days may, well before your examination though. So all these 4 chapters together, the weightage is 33 to 38%. The past exam trend says that you can expect 15 to 20 marks. I also have it in store. In May 18, question number 3 was from this chapter for 20 marks. In November 18, there was no marks from this chapter. In May 19, question number 3A for 10 marks and question number 6 for 5 marks was there from this chapter. And November 19 again, 2 marks. Isn't it? So I like to keep my material. And then November 2020 May 15 marks question had come, and January 2021 question number 2 for 20 marks had come. Sir, you not updated December 21, May 22 and November 22. November 22, I don't know. You would have to write the test and then come back and tell me how many marks did it come for. But December 21 and May 22, I didn't put it for a purpose. The reason is, in the first 2 videos of this amalgamation discussion, I'm going to do conceptual discussion. What is amalgamation, how to do amalgamation, journal entries, lecture and everything. But in the later part, in the same playlist, you can see another video wherein I'll be discussing a detailed solution to December 21 and May 2022 examination question. That is the reason I didn't put it here. So that will come in as a continuation to this video. So please do wait to watch that as well. Yeah, because I believe in the fact that if you just teach theoretically, conceptually people will be strong, but in the exam it's not the theoretical knowledge that's tested. Practically there'll be a question in hand in the paper, and there's the expectation is to write an answer on the other paper. So to live up to that expectation, I would train you people by solving not just random question which I like or I think important. I will solve 2 examination questions here in the free YouTube video for you to get the maximum advantage and make your preparations the best for your November 2022 exam. The reason is pretty simple. I don't want you all to be CA intermediate aspirants any longer. You've been CA intermediate aspirants for so long. Enough. Move on to articleship, move on to CA final students. So I want you all to move on to next level. So that's the pretty intention with which we'll be doing this in the coming up videos. Great. So that's it. So there were 2 attempts where the questions didn't come in the examination, but however, if it comes, 15 to 20 marks. Now let me go ahead and then tell you why is it that I consider this chapter an important chapter to be done and why am I doing it after liquidation. I'll tell you the story of mine, what happened with me when I was preparing for my CA final, not intermediate, CA final. So CA final, mein, there are a couple of very big chapters. One is consolidation, other one is corporate restructuring. Corporate restructuring is basically your amalgamation chapter with external reconstruction, absorption, everything put together. This was under the old syllabus of CA final, but though what really happened is the FR examination is the first examination. People will be tensed, and you don't really know if you should start studying this paper from 3 days, 4 days, or 5 days before the examination. I was of an opinion that second paper, third paper, fourth paper usually have just 1.5 day, or technically one and a half day left. So why should I give more than 3 days to the first paper? So I also kept about 1.5, but because it's the first paper, I kept 2 days of time for the first paper. So 2 days before my FR exam is when I started this. Though I had done my first reading and though I had done my first revision or two revisions before, I'm not a person of revisions, I did only one revision, let me be frank. So when I prepared, the day before the exam when I'm reading, I understood one thing, that I can't revise all the chapters. Can't revise all the chapters the day before exam because the time isn't sufficient. If I revise all the chapters, I'm running through them basically. And my strategy was not to revise couple of chapters because I was conceptually strong in the chapter. I took that risk and I risked it with corporate restructuring or amalgamation chapter. I didn't revise my amalgamation chapter the day before exam or 2 days before the exam. Last I had read amalgamation chapter was a month before my final exam and I didn't revise the day before. And I went into the examination hall. When I got my examination question paper with me, 15 minutes before 2 o'clock, and I had the question paper and I read through the question paper, I saw one question on amalgamation which was for 20 marks and felt a little jittery boo in my stomach for the fact that I have not revised this topic and this has come for 20 marks. And the other question that was there was consolidation. And I had practiced consolidation, but I was not very confident. There was triangle holding, meaning there was one company which holds two companies, and that second company holds the share in the third company. It's not like straight holding. I understand. I hope you understand when you say triangle holding. So it's a complex one which will take definitely 1 hour for me to solve because I'm not super fast in consolidation. So I didn't have an option. I had to do this amalgamation question. I can't skip this. So I started with this question. I aced this question in about, I took 40 minutes, but I aced this question. I got my balance sheet tallied with all the necessary ledger accounts and I did every working note possible in the perfect way. I was damn sure that I'm going to get 20 for this one and ended up scoring 60 plus in my CA final FR papers. This was possible because amalgamation is such kind of a chapter which you can not read it the day before examination, still solve the problem in the exam to get full marks, because it doesn't need things to be mugged up the day before exam. It is just that the concept need to sit into your brain right. If the concept sits into your brain at the right place, and if you've done decent problem practice in your first reading and in first revision, trust me, you don't have to revise this topic the day before exam. Still, you will be able to ace this problem in the exam. Not many people would straight tell it you straight open that you can risk by not taking revision of the chapter the day before, but I'll tell you it worked for me. And I'm not the smartest. I'm not, yes, I can say that I was one of the most hardworking people of the times whom I could see across, because I knew that everyone around me were smart and I have to work really hard to reach where they've reached, because they're smart and I know that I'm not that smart as they are. So I knew that only way I can reach where I want to is hard work. So I can tell you that I work really hard, but I'm not the smartest. So if I could do it, all of you can. That is the reason why I stress a little on this topic and I ask students not to skip this topic. So as I've established this fact as to why is it important, let me get started. So what can you expect from this chapter? From this chapter, you can expect questions, theory-based questions on testing you what is amalgamation, absorption, and reconstruction. You can also expect questions which help you or which ask you to determine what type of amalgamation is it and types of amalgamation and differences between each type. And the questions can come on computation of purchase consideration under various methods and accounting entries or ledger accounts in the books of transferor, accounting entries or ledger accounts in the books of transferee, balance sheet of transferee company after amalgamation. So all of this can be asked from this chapter. And let's quickly get started. So I have a question for all of you. What is amalgamation? Think about the answer. Think about the answer. I'll take a small moment. I'll turn on the fan and take a sip of water. Yep, it's too hot in here. I hope you people thought of the answer. You might have thought that the definition of amalgamation is given in Companies Act 2013, few of you. And few of you thought the definition of amalgamation is given in Accounting Standard 14. So let me break the silence and answer it for you as to where is the definition given. Para 3A of Accounting Standard 14 talks about amalgamation. Like, sir, I knew it, sir. AS 14 defines amalgamation. Relax, relax. Control your emotions. Watch carefully. Accounting Standard 14 Para 3A tells the meaning of amalgamation. You know what does it say? It says amalgamation is amalgamation as per the provisions of Companies Act 2013 or other statute, but includes merger. So AS 14 doesn't give us any clear-cut definition of the word amalgamation. It just says it is amalgamation as per Companies Act 2013, but it also includes merger. That's what it says. Sir, so what do we do? We'll go back to Companies Act 2013 and ask Companies Act, what is amalgamation? Yeah, the term amalgamation or merger is not defined under Companies Act 2013, under Companies Act 1956, and also under Income Tax Act 1961. There is no definition of amalgamation. Sir, then what is amalgamation? Then we say Companies Act 2013 explains merger, explains the word merger. It doesn't explain amalgamation. It says merger is a combination of two or more entities into one. The desired effect being not just accumulation of assets and liabilities, but organizations bring down their businesses into one and then continue. And this is again not definition. This is just an explanation given. This is just an explanation given in the act. I hope you guys got this. Let me repeat what I just told. The definition of amalgamation is not given in Accounting Standard 14 or Companies Act 1956, Companies Act 2013 or Income Tax Act. Para 3A of Accounting Standard 14 tells that amalgamation is as per the provisions of Companies Act 2013 and includes merger. And Companies Act 2013 explains the word merger. It says that it's a combination of two or more entities into one. Two or more entities into one. The desired effect is not just bringing the assets and liabilities together. It is like, okay, what's yours is mine, what's mine is mine, and then you bring it together. No. That's not the objective. The objective is to merge the business and then continue the business in a big way. I hope you got it. Yeah, that, my friends, is what we mean when we use the word amalgamation. Let's go further little ahead and then understand this. What is amalgamation? What is merger? What is absorption? What is external reconstruction? What is internal reconstruction? All of this. So basically we'll understand three words: merger, that is amalgamation, absorption and external reconstruction. Shall we? The first word is amalgamation. The next word will be absorption, and the last word that we'll understand is external. So the first one, amalgamation. The standard and then very good example for amalgamation is that what happened between Idea and Vodafone. So there was a company by name Idea and there was a company by name Vodafone, and then they both came together to form we. You might have come across that ad. They used to say we so long, and then company went we. So that, my friends, is amalgamation. So there is Vodafone, there is Idea, and they created a new company we. They liquidated Vodafone, they liquidated Idea, and we was created to take over the business of both Vodafone and Idea. So there are two liquidations, minimum two liquidations, one incorporation, and this incorporated company is taking over two liquidated companies. That is amalgamation. We'll see the next one. Absorption. What do you mean by absorption? Absorption is what happened between Vodafone and Hutch. Hutch and Vodafone. There was a company by name Hutchinson SA. You might have come across that ad, okay? You were this beautiful world in grass, blue sky. That ad used to come. So that was a business in India, Hutchinson SA. Vodafone is a UK based company. This UK based company was looking to step into Indian telecom market. And this Hutchinson SA was trying to basically get out of Indian market. So Indian Hutch was acquired by Vodafone company. So Hutch got liquidated. Vodafone, which is already there, acquired Vodafone, which is already there, acquired Hutch. So there is one liquidation. No incorporation. An existing company took over the business of a company and liquidated it. So Vodafone, no new incorporation. Hutchinson SR, liquidation and then acquisition. This is acquisition. And another example of acquisition is Flipkart taking over Myntra, Flipkart taking over Jabong, and Walmart taking over Flipkart. Walmart took over Flipkart and Flipkart took over Myntra and Jabong. So this is what we can say as a standard example for absorption. And after amalgamation and absorption, we have third new thing. It is external reconstruction. External reconstruction, what happens is one company is liquidated, another new company is formed. This new company is formed exclusively to take over this whole company. Let me repeat. This new company is formed exclusively to take over this old company. Basically, you might have seen internal reconstruction. It is internal reconstruction, except for the fact that the name of the company is getting changed. Internal reconstruction, what do? Close the door and then inside the company you change, share capital you change, creditors you change, assets, everything you do repairing. Here what you do is instead of doing so much repairing inside the house, you will build one new house. Say, transfer all the assets and liabilities into that house, and when you're taking it from here to there, you will repair and then transfer. At the adjusted figures you transfer them and then sell off this old house. That is external reconstruction. So basically one company is liquidated, one company is created. This new company is created with the sole objective of taking over the business of that old company. So one liquidation, one incorporation. That, my friends, is external reconstruction. Example is UTI Bank getting transformed into Axis Bank. UTI getting transformed into Axis Bank is a very standard example of what we can say external reconstruction. Let's understand the characteristic features. Meaning, amalgamation. Two or more companies are wound up and new companies formed to take over. And what about absorption? An existing company takes over the business of one or more existing companies. Existing company would have formed takes over the business of one or more existing companies. That is like Hutchinson or Flipkart taking over Jabang and Myntra. That, my friends, is absorption. External reconstruction is a newly formed company takes over the business of an existing company. Axis Bank, a newly formed company, taking over the business of an existing company, that is UTA Bank. You get this? Now, what I was mentioning to you people before, companies involved. How many companies are involved in amalgamation? There are minimum 3 companies involved. Minimum 3 companies involved. In the case of absorption, there are basically 2 companies involved. Minimum. But whereas one company can absorb 2 companies at a time. So then we'll have 3. But I'm talking about only minimum number. There are minimum 2 companies involved in absorption. In external reconstruction, there are 2, and this 2 is not the minimum number. This is only number. There are only 2 companies. So in external reconstruction, we have only 2 companies. There is difference between only 2 and minimum 2. Get that? Very good. Now, liquidation. In the case of amalgamation, 2 or more companies will get liquidated. So minimum 2 companies are liquidated. And the third company that is involved is the company which is taking over. In the case of absorption, minimum 1 company is getting liquidated. Minimum money, 1 company is getting liquidated. In the case of external reconstruction, only 1 company should get liquidated. Only one. If more than 1 company is getting liquidated and a new company is formed to take it over, that will become amalgamation. I hope you got that. Great. Then incorporation. In the case of amalgamation, there is one new incorporation. Minimum only one, and one incorporation is there. In the case of absorption, there is no incorporation. Why? One existing company is taking over one of the closing companies. So there is no incorporation. And in external reconstruction, there will be one incorporation. You guys agree with me? And this amalgamation and absorption together, the objective is to take advantage of large scale production or to avoid competition. Whereas external reconstruction, the objective is very simple. It is financial restructuring. Yeah, you do internal reconstruction, something similar, but when the name of the company is going to get changed, that's what we call as amalgamation. Sorry, external reconstruction. Yes. Okay, I'll show this to you for a brief moment so that if you would want to read or take a screenshot or note it down, you can. Yep. Yep. I hope you people did go through this. Great. Now let me take you a little ahead and then help you more with the chapter. Here we go. Who are the parties involved in amalgamation, absorption, and external reconstruction? There are two parties involved, or even if there are more than two parties involved, we'll categorize them into two categories. One is transferor, other one is transferee. Transferor is the big company, the company which is acquiring. Transferor is a small company which is giving all of its assets and liabilities. Transferee, as we say in Kannada, one who's is receiving. One who's receiving will be transferee. So transferee company is the company which is taking over all the assets and liabilities. Transferor company is the company which is giving all its assets and liabilities. And the company which is liquidating is transferor. The company which is getting incorporated or company which is acquiring, absorbing the transferor company is transferee company. And we need to learn accounting from both the perspectives in this chapter. Great. Now, let's talk a little bit about accounting standard 14. Because usually in accounting standard classes, they teach you entire accounting standards, but they tell accounting standard 13, you learn it in your regular accounts class. They don't teach it as standard separately, but they teach it with your investment chapter. Same is the case with AS 14 also. And same is the case with AS 3 also when you read it in group 1. AS 3 will not be taught in usual AS class. They say this you learn it with financial statements of companies, cash flow statement. That's how it's going to be. Accounting standard 14 talks about accounting for amalgamation. And AS 14 deals with amalgamation, absorption, and external reconstruction. All the three are covered under accounting standards. All the three forms: amalgamation, absorption, and external. And AS 14 prescribes accounting in the books of transferee. The books of transferee company. AS 14 only and only tells us how to do the accounting entries in the books of transferee company. Transferee company is the company which is acquiring, which is continuing its business after acquiring the transfer. So how to do accounting in this books is given under accounting standard 14. And for this purpose, accounting standard 14 classifies everything: merger, absorption, external reconstruction, everything into two categories. Sir, but we just now saw these two categories here, whatever you just taught us. See, these classifications, whatever we have here, is right. Amalgamation, absorption, and external reconstruction. This is generally in the outside practical what we use. But for the purpose of accounting, the classification is little different. For the purpose of accounting under AS 14, the classification of amalgamation, absorption, external reconstruction is done into two categories. Categories are: number one, amalgamation in the nature of merger, and number two, amalgamation in the nature of merger. So if the amalgamation is in the nature of merger, the way we going to do accounting is different than how we are going to do accounting if it is amalgamation in the nature of purchase. Let me repeat it for you. Accounting standard 14 prescribes the kind of accounting to be followed by an organization whenever it is going for amalgamation. And this amalgamation, what we're going to do, the accounting is prescribed by AS 14 only and only in the books of transferee company. About transferor company, AS 14 is silent, doesn't say anything. So accounting standard 14 only talks about how to do accounting in the books of transferee company. And for the purpose of accounting in the books of transferee company, the entire amalgamation is categorized into two broad classifications. Number one is amalgamation in the nature of merger. Number two is amalgamation in the nature of purchase. I hope you all understood. Great. Now, this classification is done for the purpose of accounting. How do we classify? How do we decide whether it is merger or purchase? Think of it. Some of you, if you would have already read, please do think of the answer. Try to recall what exactly is the basis to determine whether it is purchase or merger. There are 5 conditions given under accounting standard 14. How many? 5. If all these 5 conditions are satisfied, it is amalgamation in the nature of merger. If even one out of these 5 conditions is not satisfied, then it is amalgamation in the nature of purchase. So these 5 conditions help us decide whether it is merger or purchase. Let me repeat. These 5 conditions given under amalgamation standard, accounting standard 14, help us decide whether it is merger or purchase. Now let's see what are the 5 conditions. Shall we? So basically, amalgamation can be in the nature of merger or purchase. How do we decide merger or purchase? Based on 5 conditions. There is 1, 2, 3, 4, 5. It's like 1, 2, 3, 4. Yeah, it's not that. It is like 1, 2, 3, 4, 5. All the 5. If you tick, 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 all the 5 conditions, all 5 are satisfied. It is amalgamation in the nature of merger. Even if one out of these 5 conditions, you satisfy 1, 2, 3, 4, but you didn't satisfy 5, it is merger. No, it is purchase. So even if one out of 5 is not satisfied, it will become amalgamation in the nature of purchase. Then we decide how to do accounting in the books of merger and purchase. But before we go any further ahead to see how the accounting is done in merger, see how the accounting is done in purchase, what will we do? Let's quickly get in to understand as to what are these 5 conditions which are given as per para 3E of accounting standard 14. What are we discussing? How do we do accounting? Sorry, what are the 5 conditions that we need to check for as per para 3E of accounting standard 14? Shall we see that? There we go. Condition number 1. The condition number 1 is all the assets and liabilities of the transferor company should be taken over by transferee company. All the assets and all the liabilities of the transferor small company should be taken over by transferee company. Get that? Very good. So this, you cannot say I'll take this and this I don't want. It's like all the assets are kept like what's up bro, what's up bro, what's up bro, what's up bro, kuchi, what's up bro, what's up bro. You can't do that for assets. That kuchi also should take over all the assets. And kuchi also. If you do kuchi and not take one asset, it will become amalgamation in the nature of purchase, and it will no more be amalgamation in the nature of merger. You guys get that? Yes. So condition number 1 says that all the assets and liabilities of the transferor company should be taken over by transferee company. Then we have the second condition. Second condition goes to say that minimum 90% of the shareholders of the transferor company should continue as shareholders of transferee company. Is it? Minimum 90% of the shareholders of transferor company should continue to be shareholders of transferee company. So, out of all the shareholders that are there in transferor company, minimum 90%. If there are 100 shareholders, minimum 90 of them should become shareholders in transferee after the takeover. If only 80% of them are there, so majority stake is changing, so the shares is diluted. We don't have the old shareholders anymore, so it is not merger. It is like a new company. You acquire that company. You get that? So it is with an intention that you need to retain so many people in your company. How do you retain minimum 90%? How do you ensure that shareholders of transfer continue to be shareholders in your company? You can ensure that by giving them consideration only in terms of equity shares. That's the third one. See here. Consideration that the transferee company should give to transferor company shareholders. That company is getting liquidated. In that company, there were shareholders. Am I right? So to them, when you give consideration, purchase consideration, that purchase consideration, what you give should be equity shares in transferee company. Should be equity shares in transfer. You should give shares in this company to the shareholders of that company, so that the shareholders of that company will become the shareholders of this company, and 90% condition is satisfied. But you can't give shares in every case. What happens? Some cases may assume that there is that ratio. For every 2 shares in that company, I'll give 1 share in this company. So if there are 2 shares in transfer company, you give 1 share in transferee company. If there are 4 shares in transferor company, you give 1 share in transferee company. What if there are 5 shares in transferor company? Can you give 2.5? A share is already a share in the share capital. How can you share the share further? Do you understand? Share is already a share in the share capital. How can you share the share further? Share cannot be shared in further. Fractional share cannot be issued. So what do? You give them paisa. You give them money for that fractional share. So minimum 90% of the shareholders of transferor company should continue to be shareholders in transferee company. This is possible by giving the purchase consideration to shareholders of transferor company by way of equity shares in transferee company. And you can give cash to shareholders of transferor company for fractional amount if in case that ratio doesn't let us to give a share in part. Done. And in this 90% computation, the shares of the transferor company already held by transferee company are not counted. I might already be holding company, or I might be an associate, or I might be holding major stake in that company. 15%, 20%. Significant influence can be there, or it can be the holding company all by itself. But that should not be counted. If I already hold certain shares in that company, that should not be counted in this 90% category. Only other than what I hold, whatever the people other than me hold in that company, minimum 90% of them should continue. Got that? So that, my friends, is third condition. So then I'll take you to condition number 4. Condition number 4, what we have is business of the transferor company should be continued by me. Initially, we saw this here also. No? The entire objective of amalgamation is not just taking over the assets and liabilities. We saw it here in the definition of amalgamation. See, what does amalgamation definition say? Our explanation says combination of two or more entities into one. Desired effect being not just the accumulation of assets and liabilities, but organization of such entities into one business. Meaning, I am doing some business, transferring. Transferor is doing some business. When we merge or amalgamate and then become one entity, I should continue the business that I was doing as transferee, also continue the business of transferor. My objective should not be to shut down the business of transfer. So what is it? Only thing that I'm trying to tell you is the business of the transferor company should also be continued by transferee. Sir, what if we don't continue? Then it will no longer be amalgamation in the nature of merger. It will become amalgamation in the nature of purchase. Let me repeat. If any one of this 1, 2, 3, 4 or the fifth condition that I will tell is not satisfied, then it will not become amalgamation in the nature of merger. It will become amalgamation in the nature of purchase. Got that, guys? Then what do we have after that? Fifth condition. Assets and liabilities should be taken over, no, in condition number 1. Those assets and liabilities what are taken over should always be taken over at book value. Be taken over at what value? Book value. You cannot take them over at agreed random values. So this is again important condition, because what if I want to take certain assets from them and I want to evade capital gain tax? So I might say I will take only land and building of your company. Others I won't take, and that will take it at an agreed price, higher price, market price, not at book value. If they just sell like that, there might be capital gain coming in. So they put it into that company's balance sheet, sell all the other assets, they'll sell it to somebody else. I'll buy that company, but I'm actually buying that land and building, and I won't continue their business, and I'm valuing that building at a higher rate. That's not correct. That's incorrect. So you can do that, but then it will become amalgamation in the nature of purchase and not merger. To call it amalgamation in the nature of merger, I need to take over all the assets and liabilities of my transferee company at its book value. Sir, what about reserves and surplus if it's a including reserves and surplus? Sir, P&L account debit balance? Yes. General reserve? Yes. Capital reserve? Yes. Sir, what if there are some statutory reserve? Yes, Baba, yes. All the assets and liabilities, including reserves and surplus of the transferor company, should be taken over by transferee company at its book value, and consideration to shareholders of transferor company should be scheduled by way of issue of equity shares in transferee company only, except for fractional shares. And minimum 90% of the shareholders should continue to be shareholders in this new company, and transferee company should continue the business of transferor company. Only and only if all of these 5 conditions are satisfied, that would become amalgamation in the nature of merger. Forgot to mention, you can change the value, book value, but just to bring uniformity in accounting policies. For example, transferor company is following weighted average method for valuing inventory. Transferee company is following first in first out. Now, when they become one, they need to follow one accounting policy for valuing inventory. What do? Commonly, you both agree to do weighted average or agree to do FIFO. So then it is an accounting policy change, needs to be given retrospective effect. So you give retrospective effect to the stock, and the stock value will change. When the stock value changes, the revised value is considered. You cannot say, hey, you took stock at revised figure, so this is not at book value, it is not merger. You can't say that. It will be considered as merger. Why? The reason is pretty simple. The change from the book value to another revalued figure has happened only and only to bring uniformity in accounting policy. You get that? So these are the 5 conditions. I'll leave you with the screen for about 20-30 seconds so that you can take a pause, copy it, or click a screenshot or note it down in your book. And at the end of which, I'll run you to the next part of this topic. I'll take you back to that amalgamation, the nature of merger, amalgamation, nature of purchase, when do we decide, and how to do accounting and everything. If in case you want the PDF on this topic and the solution to all the examination questions and RTP, MTP questions and everything, I have a very nice compilation for last minute revision especially. I can definitely share it with you. You just have to get in touch with me. Search for me. I'm CA Rajavardhan. People also call me Accounts Man. ACCOUNTSMAN. I'm there at every other social platform where you are there. You can search, find me and then text me and I'll definitely share this file. Yes, I hope you made a quick note of all of these 5 conditions or clicked a screenshot. So now we know when do we call it merger, when do we call it purchase. All the 5 conditions are satisfied, merger. Even if 1 out of 5, it doesn't matter which one. If it is not satisfied, it is purchase. Then if it is merger, how do we do accounting? Accounting as per accounting standard 14 says that for amalgamation in the nature of merger, we need to follow pooling of interest method. In whose books? I told you, no, accounting as per AS 14 is only given for transferee books. Here AS 14 prescribes the accounting in the books of transferee company, the big company which acquires. Sir, why not in the books of transferor? Transferor is dying. Let him die. So accounting standard 14 will not tell how to die. Tie the rope around your neck and then tie it to the fan and then jump, or no, jump into the water with your hands and legs tied, or take poison. No. Accounting standard 14 is not going to guide you how to die. You are dying, you die. You are die, you die. I will not tell you how to die. I am concerned about the one who's surviving, one who's going forward to live and prosper. I'll tell how to live long and prosper to the company which is continuing. You get that? So the accounting standard 14 only talks about how to do accounting in the books of transferee company. And that says, according to accounting standard 14, in the case of amalgamation in the nature of merger, we need to do or we need to follow pooling of interest method. What method? Pooling of interest method. And in the upcoming video, we'll also discuss journal entries as to how to do accounting. And accounting standard 14 also mentions how to do accounting in the case of purchase. In the case of purchase, it says transferee company should follow purchase method. What should it follow? Purchase method. So let me just quickly repeat. In the case of merger, transferee company should follow pooling of interest method, and in the case of purchase, transferee company to follow purchase method. Okay, sir, you told us how to do accounting in the books of transferee company. Then what about transferor company? How to do accounting in the books of transferor company? If you ask this question from accounting standard 14, accounting standard 14 will make a innocent baby's face and then say, I don't know. What does AS 14 say? I don't know. So AS 14 doesn't say how to do accounting in the case of amalgamation in the books of transferor, whether it is purchase or merger. So then what do we do? AS 14 is silent about it. Then we would have to ask someone to tell something. Whom do we ask? GAP. GAP is generally accepted accounting principles. Generally accepted accounting principles, GAP tells us to follow dissolution approach, liquidation approach, or realization approach. Let me repeat, dissolution approach, liquidation approach, or realization approach. This is the approach mentioned to us by generally accepted accounting principles, what we follow. If you would have done partnership already, you might have read this in partnership, no? That there is a method by name, or to say realization approach is what we follow. Transfer all the assets at book value to realization account. Transfer all the liabilities at book value to realization account. Then what do? We'll take all of these assets and liabilities and then basically transfer it to the person who buys it. Purchase consideration due entry, purchase consideration receipt entry, assets not taken over disposed, assets not as liabilities not taken over disposed, realization expenses. After writing this, we'll arrive at realization profit or loss. This will be transferred to partners capital, and then partners capital account and then bank account or cash account entry should match. Do that usually. Same thing is done here also, but there we prepare partners capital account. Here we will prepare shareholders account to do the same. Otherwise, this and that is same to same. No difference. Got it, guys? I hope you all understood. That's with regard to how to treat amalgamation in the nature of merger and purchase separate. We have a lot of interesting discussion coming up. In the next video, we'll be discussing what is purchase consideration and how to compute purchase consideration. So next video, please be stay tuned and then understand. To quickly revise what we discussed in today's discussion or in this video, we started with the topic of amalgamation of companies. I told you the weightage of the chapter and how many marks it has come for in the past few attempts. And then I told you what can you expect from this chapter of amalgamation in the examination. And then I told you the meaning of amalgamation, which is not defined under accounting standard or what do you say, the law. Only the explanation is given as to what it is. We discussed that. Then we went on to understand difference between amalgamation, absorption, and external reconstruction. And after this, we understood who are the parties to amalgamation, absorption, and external reconstruction. And we spoke about accounting standard 14 and what is the accounting that it recommends. It is based on the categorization of amalgamation, absorption, external reconstruction to two broad classifications, that is amalgamation in the nature of merger and amalgamation in the nature of purchase. Then we went on to understand how to determine whether it is amalgamation in the nature of merger or purchase, which is based on 5 conditions, which is given as per para 3E of accounting standard 14. We discussed all the 5 conditions, after discussing which we understood how to do accounting for amalgamation in the nature of merger and purchase, which is pooling of interest method and purchase method. And we also understood the fact that accounting standard 14 is silent about what accounting is to be done in the books of transferor, for which we will rely upon generally accepted accounting principles, which basically requires us to do accounting in the technique of or in the approach of dissolution, liquidation, or realization. So I hope you all got this. So this is with regard to discussion in this video. That's it for now. But very soon I'm going to come about with another video wherein I'm going to discuss what is purchase consideration. I hope you stay tuned, follow this YouTube channel, like, share and subscribe, and also wait to watch the next video. In the next video, we'll discuss purchase consideration and little more about types of purchase consideration. In the video after that, we'll do journal entries and ledger accounts, what's required. We'll also do questions on amalgamation from the recent 2 attempts in the continuation to this series of videos. Yeah, so till then, remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun, it's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple, it is to stay in the game. So one last time on this day, I have just one simple question for all of you. Are we in the game? I hope the answer is yes. See you in the second part to amalgamation video. Till then, stay in the game. Tata, bye bye, take care, and get lost.